Good morning. Welcome to the XM.com weekly market update. And we're joined again by Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
All right, the big news in Australia, the Aussie dollar.
The peso's been hit hard. Have a look at it.
Yes, it's
one-way traffic.
It certainly is. So dipped slightly below 64 a few days ago. It's hanging around that 64 cent mark now,
Yeah.
but it's tough going at the moment.
Well, it's tough going if you want it to go up in value. If you want to be bullish, it's very tough. But for the bearish traders, have just been all over it against all the cross rates. It's been absolutely unbelievable in the last, say, 3 weeks. And on the back of China, of course, and what's going on with the global theme. And, you know, you never get in the way of a bearish market or a bull market as far as a pullback. The profits have been dramatic.
Yeah. And obviously China, which we'll touch on shortly, and also the interest rate differentials between Australia and the US is still there.
Exactly.
Which clearly does not help the Aussie dollar either. So
No.
looking at China, plenty of stats came out last week. The industrial production came in at 3.7. They were looking at 4.7.
Yeah.
So it is a considerable difference on the downside.
Absolutely, and how that naturally runs forward to like the September, October, November leading up to Christmas. Is it going to be are we really back to those under sub 2 number? The issue with production is that you need internal demand or you need to export it. And if it's weak everywhere, then who's going to buy it? And if it's not weak everywhere, then you're looking at the internal demand, and China's got to do some dramatic stimulus to get internal demand.
Yeah, they've got plenty of work to do. Retail sales as well came in lower than expected, about 1.5% lower than expected actually, so which is a big difference. Retail sales struggling, and then obviously you've got all the collateral damage from Evergrande now going into bankruptcy as well on the property market, and we know how big that property market, the impact of it is in China.
We've discussed it in weeks gone by, and you know who the bondholders are: 160 banks internally, 120 international banks holding the debt. So yeah, let's see how that all manifests in the next 6 to 8 weeks.
Yeah, it's certainly causing some issues.
Well,
on the other hand, Japan is looking reasonably good. So
yes,
the GDP quarter on quarter there it was up 1.5%. They were only expecting, the forecast was 1%. So it's quite a difference.
Very bullish.
Yeah, they seem to be pulling themselves out of that slumber that they were in for such a long time.
Yeah, exactly right. And you know, we saw the Nikkei. You just have to look at a chart to get a perspective. But the Nikkei's certainly bounced to the upside in 32, 33, 34,000 sort of headline. Maybe there's further, but keep an eye on the yen.
For sure, and CPI once again steady from last month as well, but like 3.3% CPI for Japan is actually a reasonable sort of figure.
Yeah, it's good. It's great. I'd be interested to see if how the governor looks at policy and how the Bank of Japan manages all of this moving forward. I mean, do you see continual intervention as that yen approaches the 150 handle? What are they going to do with rates? So it's it's a wait and see. Maybe they're the last man standing.
Yeah, which is probably the rates is probably the biggest issue, I think, which obviously puts the yen under pressure. And once again, as we talked about, the interest rate differentials is huge. Japan to a lot of other economies.
Absolutely, yeah. Maybe not to Switzerland, but certainly to Japan, and and certainly to the States. So.
Yeah, what's the yen there now? Around that 146
sort of
6-7 sort of mark. Yeah. So
and as it approaches 150, what is the government prepared to do to try and manage it?
For sure. Once again, we'll look at the Nasdaq just quickly. Just come out of earnings season, and once again, the earnings season was actually pretty positive in the US.
Yes.
But we are seeing the US market's a little bit
jittery.
A little bit vulnerable at the moment, which is not surprising. They'd had such a solid first 6 months of the year. Earnings are okay, but once again, the interest rates, particularly the longer dated interest rates, are creeping up even further again, which seems to be having a bit of impact on that sentiment in the equity markets.
Yeah, exactly. And the S&P was down 5%, the Nasdaq around about 8% over that from their highs. So we'll just see if it was just a little bit of a figment of someone's imagination, or there's going to be some more move, and we've just got to see how it all rolls. But I'm looking forward to this Friday. Naturally, Jackson Hole. What happens is in the symposium from Fed Chair Powell, rhetoric market sentiment, how it's interpreted, and whether we see another rate rise this year. Is it only one? Is it none? Or is it two?
Yeah, the unknowns, but the financial markets like certainty, but pretty rare you get certainty in the financial markets.
Yeah, I think it's the only certainty we got is that we believe the meeting will go ahead as long as Hurricane Hillary doesn't roll into Wyoming.
That's right, exactly. And finally, just looking at those yields, they've really crept back up, both the 2s and the 10s.
Yeah.
They are at, now that's only a 2-year chart. You could go back over 10 years and we are close to all-time highs. Not all-time highs, but for that period of time.
For that period of time.
Yeah.
Certainly, I read, I've got to get the numbers right, but it was either that, I think it was the 30-year was back to 2007 numbers and the 10-year was back to, 2008 or something as far as rate rise, or it might have been 11.
Yeah.
So, just quite incredible how they've been massaged up.
Yeah, and it's sort of interesting as well, particularly a few months ago where there was a bit of talk around, are they holding, will mill rates come off towards the end of the year, which, who knows, they may still do that. We've still got plenty of time. But
yes, of course.
But you look at that at the moment and they seem to be sort of hovering around those levels now. So, and another interest rate rise in the US, who knows? Probably not needed. Yeah, probably not needed at this stage, but because the economy is holding up pretty well.
Yeah.
But once again, and the CPI has come down substantially in the US.
Yes, it has.
I know it crept up slightly last time, but that's obviously still the key figure.
Yeah, and non-farm payrolls coming out in about 2 weeks' time, the first Friday in September. So just got to see how all of that's going. Summer employment and so on.
Yeah. Anyway, we'll keep an eye on things. Once, particularly the Aussie dollar on the local front.
Yeah, you bet.
And,
that's exciting.
It certainly is, and we'll see how things play out over the course of the next week.
Look forward to it.
Great. Okay, Pete, thanks again.
Good to see you, Andrew.
And that's the XM.com weekly market update.